Sir Alex, sir, shall we start the session, sir?
So can we start?
Yes, sir. I'm starting it. I'm starting the session, sir.
Okay, yeah, go ahead.
Good evening, everyone, and I welcome to the second day workshop, Payroll Management, hosted by Sri Vidyaniketan Institute of Management, Tirupati. The foremost thing, I thank you all for your appreciations. It was like a boost to us, and I also pray the Almighty to give the same support as yesterday to run the session smoothly. Let me give you a brief overview about the yesterday's session. We had a brief introduction about compensation and benefits, and we also discussed about the components, the statutory compliance and non-statutory compliance, and we have moved on to statutory compliance, and we have covered basic house rent allowance, medical, travel, and employee provident fund, pension fund, and employee state insurance. So this is what the yesterday's session's brief overview. And today also, if at all any queries in the mid of the session, you can use the hand raise icon so that I can unmute you and you can pose your query there. All the best. And I thank all the participants. Sir, over to you, Sir Alex, sir.
So thank you, ma'am, for the recap. So I hope most of you had a lot of clarity yesterday, where we discussed a lot of basic components on that note yesterday. So today we want to see the remaining components about compensation, what is the remaining and how the calculation works. And today I'm going to roughly show you how we can implement this in the payslip. We want to start off with that. And there are a lot of ways of probably creating payslips. A lot of versions are there. So I'm going to tell you a version which I probably mostly used, and some of the companies are following this pay structure mode. So I think I think we discussed briefly about basic, HRA, medical, travel, provident fund, and ESI, right? So a short recap on the percentages. So basic is anywhere between 30 to 50% of gross salary, and the industry standard is 35% to 40% of gross salary. As I told you, I will tell today why and how this 30 to 50% logic is being arrived, right? So we will probably understand when I'm putting that in the payslip. And then we also seen a concept called DNS allowance. But as I told you, it is DNS allowance is only applicable for organized sector. So it is not applicable for unorganized sector. So that is what we are seeing in our pay structure. DNS allowance will not be included, right? So instead of DNS allowance, we have HRA, which is house rental allowance. It is anywhere between 50% of basic for metro and 40% of basic for non-metro. This is another percentage that you can remember across. And then you have standard deductions. As I told you, previously medical and travel had a different ideology. There is a separate header which was written, but right now they have made it a common header as standard deductions, which is 50,000 rupees, right? So the maximum of 50,000 rupees. If it is less, no worries, but it cannot exceed more than 50,000 rupees. So that is another ceiling which we have. And then we talked about Provident Fund. In Provident Fund, two important concepts is employee and employer share is equal, 12% of basic and 12% of basic. On top of that, you have a government interest of 8.5%, which is a model of compound interest methodology, right? And another very important concept that we discussed yesterday was the P cutoff limit, right? So PF cutoff limit. So what is PF cutoff limit is once the basic crosses 15,000, then the PF can be calculated on either actual or assumed basic, which means the employer has the right to choose between either one, right? So most of the time it will go for the cutoff limit only, because to reduce the cost burden to the employers, they will definitely go for that only, right? So that is how this thing works. But sometimes, yes, they can go for actual also. It is completely an employer call, right? So that's what another idea which we have seen. So two important takeaways. One thing is you have an employee share, employer share, and then what is another thing that you need to work upon is you have the cutoff limit which is being applied, right? So this is another thing that we have distributed, and we also see how loans and things are distributed. Yesterday also we have seen that as well. And then I think we finished up, we winded up session with ESI. Okay. I think Dr. Martina, is there any question, ma'am? Or is there?
No, sir.
Okay.
By mistake, it got.
Okay, fine. Okay, no issues. Right. So this is again the ESI. I think we stopped with that, which is 3.25% of gross salary, and the employer share is 0.75% of gross salary. Another very important concept in ESI is up to 21,000 rupees, right? A maximum of 21,000 rupees of gross salary, they are only covered under ESI. So once your gross salary crosses 21,000, then ESI is not applicable, right? So this is a short recap of what we have seen, the percentages I have told you. Now next what we want to do is we want to work on the next concept, which is called bonus, right? Which is called bonus. Now when you talk about bonus, there is a lot of conceptions on this, like why a bonus is being given, non-mandatory. A lot of questions are coming into our picture, right? But let us understand each and every component that you're seeing here has a purpose, right? So bonus also has a purpose. So many people consider bonus as probably from an employer perspective, if you ask, bonus is something like an extra income kind of it, or an extra benefit that a person is giving. So that is when most of us will confuse whether bonus is a part of benefit or compensation, right? I think we also have this confusion, right? Because the employers will make us feel that bonus is something which is given as a benefit, but it is actually, technically speaking, it is a statutory compliance, which means you have to pay bonus, right? That is mandatory, right? So but that comes as a part of benefit, but it is technically no, because there is a payment of bonus act which governs bonus. Now let us understand how bonus really works, right? So what are the percentages that bonus can be availed, right? So we will see that. So this is the bonus perspective. What is bonus basically? If you talk about it, is a share of profit by the employer. The real intention behind bonus, or when you talk about as per the law, bonus is not an extra income or a benefit. Bonus is designed by the government that you are making profit, right? So you are incurring a profit only due to the employee's performance and efforts. So what happens is you should give a considerable amount from your share to the employees as well, right? So that is something that you need to understand. So bonus is treated as a share of profit only by the employer. Now, what is the percentage? If I ask about it, it can be anywhere between 8.33% to 20% of basic. 8.33 to 20% of basic. That is the minimum condition is 8.33. Maximum you can give 100% also. No worries. You can do that also. But largely speaking, 20% is more affordable, or sometimes the company can give you 1 month salary also. And who is eligible for bonus is another question that people have, right? So there are two things actually. One probability is bonus is applicable to every establishment which has over 20 employees on a given day, right? So 20 or more employees. If your company is coming under 20 or more employees, then you have to give bonus. And the second condition is bonus is mandatory for people earning up to 21,000 gross salary per month, right? Previously it was 15,000. Now they have raised it to 21,000. So bonus is mandatory for these people. Other people who is crossing about 21,000, yes, you have a leverage of whether you can pay or not is a question. But up to 21,000, it is mandatory for you to pay bonus. And the second thing is, if you ask about another question that people ask mostly is, when a person is eligible, whether how many years of experience that he needs to has, right? Whether the new employee also says that this particular person should have this many years of experience in my company, right? But as per the bonus act, if you talk about, any employee who is working 30 days or more is eligible for bonus. 30 days, right? So 30 days. Any full-time employee that is working for 30 days, he has minimum work for 30 days in the calendar year, he is eligible for bonus according to the act. So that is the governability. So which logically speaks, any new employee also who is more than a 30 days old, he also comes under the purview of bonus act. Second very important thing. And another important concept about bonus is, another name for bonus if you talk about, it is called as accrued payment, right? Accrued payment. Now what is this accrued payment is, every month a certain portion of bonus is being taken, it is being reserved from your salary, and over a period of time, that is in the financial year, I have to pay it in one shot, right? That is what we say as accrued payment, which means monthly I will not get bonus, but at one time in the accounting year, at one slot, I might get bonus at any point of time. Most of the time the company chooses a festive month, so that it is not a norm actually that you should give bonus only during Diwali or Pongal. It is not a norm like that, but it will be useful when you're giving that money. So that is the reason why bonus is always given during festive time. But as per the act, or as per the applicability, if you talk about, bonus should be given anywhere in that financial year. That is the idea. Between the April to March, you have to give bonus at any point of time, and in single shot only, not monthly, but single shot. Right. So this is a very important concept. So this is what is bonus. Share of profit. The percentage is 8.33 to 20% of basic, and the very important thing is, once the basic crosses 21,000, then it is not mandatory for you to give bonus. But usually, what happens is, the company is not very restrictive, of course, but they are really willing in. Usually bonus, it will not be looking good when you give for only a particular segment of people and others you avoid it only because of the wage ceiling. So to avoid any further disappointments, you can give bonus for everybody, right? That's what the idea is. And the final concept about bonus, if you talk about, now, bonus is a share of profit, right? It is a profit. That what the bonus tells is, if you are earning a profit, you should give a particular share to the employee. Now, what happens if the company is incurring loss? Right? This also, I think the employer will ask you, right? Okay, sir, if there is a profit, I can probably, yes, I can give it. But in case of loss, can I deduct it? Right? Maybe, yeah, I'm giving it, right, when I'm getting profit. So if I'm getting a loss, can I deduct it? No, that is not possible. As per the act, minimum 100 rupees should be given as bonus, right? So that is what the idea is. So as per that act, if you talk about, minimum 100 rupees should be given as bonus for people earning up to 21,000 per month, mandatory. So which means even the company is incurring loss also, a minimum bonus amount should be given during that calendar year. So which means you cannot evade a bonus payment. 100% either or you should give bonus, right? So that is the idea. So that is the sole purpose of bonus, right? So how that profit works. Okay, so this is the percentages. So next we have is gratuity. Next we have is gratuity. I think most of you have heard this gratuity, how this things will work, right? When you talk about gratuity, is what I feel gratuity is more of, it is a more of a loyalty bonus, right? So loyalty bonus. So what is a loyalty? What is the meaning of loyalty, if you ask me? The meaning of loyalty is, an employee is dedicated and has a long-term commitment towards the organization. Right? So that is what is a perfect example of who is a loyal employee. He is committed to my company, not 1 or 2 years, but for many years. For many years, this particular person is actually associated with me. Right? So that is what we say as graduated. It's a loyalty bonus given for the continuous service, right? So imagine it is going one by one step ahead, right? So every compliance, if you talk about, right from basic necessities, cost of living, savings, health insurance, share of profit, you also have something which is for loyalty, also long-term sustainability. So I need to give something, right? So that is what is gratuity money, right? So loyalty bonus given for continuous service. So only the gratuity component, if you talk about in the entire structure, gratuity component is only the component which has a formula. So far, whatever we have seen is only percentages, but for the first time, we are seeing a gratuity formula, which is actually in probably in a formula methodology. Right? So let me tell you what are all the formulas that they have come up with actually, right? When they started gratuity, the certain set of formulas they came in. So the first, so the formula goes like this. So last drawn basic per month into number of years. So into 15 by 26. Right? 15 by 26. Now what is this 15 by 26 is? During a month, minimum number of working days and maximum number of working days. So 15 is minimum number of working days and 26 is maximum number of working days. This is as per the gratuity calculation, right? It is already designed by the government, so we cannot interfere much on this, but this is the formula 15 by 26, where 15 is the minimum number of working days and 26 is the maximum number of working days. Then you had 10 to 20 years. Okay. So the formula went like this: last drawn basic per month into number of years. 22 by 26. Right. So a slight change in this. Instead of 15, they made it 22. But still 22, what is 22 if you ask me? It is the minimum number of working days and 26 is the maximum number of working days. Same ceiling. So there's no differentiation in that. So it's the same ceiling only, 22 by 26, that's the formula. And the last formula which they came up was 20 years and above. Right? So 20 years and above. So if you ask me somebody who's married to an organization, right? So I think my previous generation will proudly say me, right? So my first wife is the job, right? So they are so they had, this is like their second home, right? So they have lived in this company for so long, right? Which means this company has become like an integral part in their life, right? Most of their lifetime has been spent in this company only, right? So that is the idea. Now if you talk about the formula, it is last drawn basic into number of years, that's it, right? Into number of years, that's it, right? So no other calculation, because 20 years and above, because they are all very loyal employees, so we don't want to restrict the amount, so we just gave into number of years. Now what happened was this: when gratuity started kicking in, so this was actually the methodology where there were 3 different formulas. Based on the number of years, it keeps changing. But over a period of time, what happened was, imagine, let us take a scenario of 20 years and above, right? Imagine one person is working for 20 years in a company, right? He's only 20 years sustainability he has. At least he will not have a 3 lakh to 4 lakh basic, at least 3 lakhs for that concern. So 3 lakh into 20, right? So 3 lakh into 20, which is almost close to 60 lakhs almost, right? So which is half a crore. For one single employee I'm talking about. For one employee, this is the amount as per the calculation suggested here. Whether the employer will be able to be in a position to pay this, 100% no. Because if he is paying gratuity money so much, then I think the company has to be given to that employee as a gift, right? That's what the idea is. So which is not 100% possible. So what happened was, government came up with 2 important checks, right? So 2 important checks or mechanism they came up with. The first mechanism was, invariably of the number of years of service, only the first formula will be used, right? Only the first formula will be used, which is last drawn basic per month into number of years into 15 by 26. That is the formula. So there will be no change in the formula. Only the first formula will be used. And the second thing is, they kept a ceiling in the maximum gratuity amount accumulated or received by the employee. Previously, it was 10 lakhs. Now they have made it 20 lakhs. 20 lakhs is the maximum gratuity money that you can get in your lifetime, even if you work for 30, 40 years also. Whatever your gratuity intake will be, the maximum money that you can get from gratuity is 20 lakhs, not more than that. So two important checkmates. First checkmate is invariably of your years of service, only the first formula is used. And the second thing is, even if you have any much of amount, the maximum amount that you can create under the gratuity header is 20 lakhs, not more than that, right? So this is a very important note, right? So you can ask me then, why did you show all this, sir? Maybe you can directly say, right? So I just showed you to just have a kind of transition, right? But as I told you, forget all these formulas. The only formula that you want to have is one single thing, right? And the second thing is gratuity is applicable to every full-time employee, right? So it is for every full-time employee. And the second thing is, when am I eligible to get this gratuity money? This is another question that people, most of us will have. When can I get this gratuity money, right? So as per the Payment of Gratuity Act, the person should have completed 5 years of continuous service, which means without break. Without break, 5 years of continuous service has to be put in the same organization. So only if a person has completed 5 years of continuous service, he is eligible for gratuity money, or else no. But in 2010, there was a Supreme Court judgment which was passed, right? Because there was a scenario where the employee has worked 4 years and 10 months, right? So he had work. That was his work experience, right? So 4 years, 10 months he was working. Last 2 months alone, he was not feeling well, or due to personal reasons, he resigned. And the government denied the company denied him the gratuity money because he has not completed 5 years. So then the Supreme Court handled this case, and they came up with a scenario that even if an employee completes 4 years and 240 days, minimum 240 days, 4 years, 240 days, which is 8 months or 10 months, that is whichever is higher, right? So 240 days in the last year, he is also eligible for gratuity money. So this Supreme Court judgment was passed in 2010, right? So, and then, yes, of course, if you have a Supreme Court judgment, then of course it becomes an amendment, it becomes a rule, it becomes a law, right? So that is something which is there. So what happened was, this is a scenario which is being taken across, right? So this is another important note that you can have. But mostly, if you talk about, most of the companies follow 5 years only, right? So they don't go by less number of years, only 5 years they go in. So that is another scenario that you have. But there is a Supreme Court reference that you have still is 4 years and 240 days. That is also there. And if you talk about which is the organization which is managing gratuity, is Life Insurance Corporation, LIC, right? I think most of it have heard this. LIC is the company which manages the gratuity. The complete gratuity mechanism is done by them. So whatever you're doing here is an annual component, right? So gratuity is calculated on annual basis. So every year you actually take the gratuity money and pay back to LIC. So once your 5-year tenure is over, right? So you have to give a notification to LIC that so there is a gratuity money which is required because this guy has completed 5 years. If you don't want to take, you can accumulate it. After 5 years, at any point of time, you can take your gratuity money. No issues. You can do that, right? Or you can keep accumulating also, no worries. But the maximum accumulation is 20 lakhs. But after 5 years, you are eligible for gratuity money at any point of time. So here, just the employer has to give an official notification to LIC, and then they will process the checks, and you can just get it directly deposited in your account. So this is what the idea is. So this is what is bonus, and this is what is gratuity. Right? So next, let us talk about leave travel allowance. Right? Let us talk about leave travel allowance. So what is leave travel allowance is, imagine this is one of the last compliance for that concern. It is one of the last parameter for that concern. When you talk about leave travel allowance, so over a period of time, people, even the employee even argued that sir, I have many compliances in my salary structure where I am using it for that, but I don't have a component for leave. For example, if I'm, because you have leave policy, right? We have PLs, we have CLs, SL. There are a lot of leaves, but over a period of time, people were not using these leaves, right? So they were only accumulating it. And government really monitored this activity, and they asked, why are you not using this leave? Because leave is given for you to have a relaxation, right? So then they said, right, sir, I don't have enough money. For example, if I want to go to my native place, I still need money, right? So I don't have that. So then the government came up with another allowance, which is called leave travel allowance, which is called LTA, leave travel allowance. What is the percentages? It is 8.3 percentage of basic. Same like bonus, same percentage. So this leave travel allowance is something that again is an annual component that you can use. Another great advantage of this is it is only taxable once in 2 years. It's once in 2 years, which means the first year LTA is exempted, the second year LTA is taxed. Right? So that is how the structure works. So the first year LTA is non-taxable, second year is taxable. So like this you can use, so that you can use that LTA and you can accumulate it and use it also. But this LTA is completely for personal travel only. It is not any business travel or official trips. It is only for a personal travel purpose. This LTA is being used, right? Then apart from LTA, there are other two more things that the companies came up with. The company started coming up with other schemes also. So the second scheme they came up with was leave travel concession, which is called LTC. What is LTC is they didn't give any fixed percentage as such, a norm, not a norm of fixed percentage maybe, but instead of that, they started giving concession rates. For example, if you are based on the grade levels, for example, if you are an executive, you might get a concession in a sleeper class. If you are a C-suite employee, you might get a consideration in the business class in flight. So as per your eligibility, there are certain concession rate which is given by the company with the tie-up with travel agencies. So here you cannot get the amount, but instead of that, you can use a concession rate based on the company. That is how it is. It is not fixed. It's not fixed. It's based on the grade level. And then the third concept which they came up was long leave travel concession. So which is called LLTC, long leave travel concession, which is only available for manager class, exclusively for manager class. The percentage is same, 8.33% of basic only. But one more advantage is it is only taxable once in 4 years, which means for the first 3 years you're going to get a tax exemption, and only the fourth year you're being taxed. LTA is 2 years, so this is double, 4 years. So second year LTA is taxable. This is fourth year the LLTC is taxable. So this is also there. Based on the hierarchical system you can have, it differs with the organizations. You cannot have a very standard leave travel allowance as such because the company cannot uh, give that. So this is one compliance. I still feel that it is not universally followed. I cannot say this is universally followed or pattern is followed by every company, because when it comes to leave management, I think the company has a little tap in it, and the government cannot interfere much on that because it's based on the organization nature and the person's working also. Lot of conditions are there. So I cannot directly impose a company to probably push all these people to have all these LTC and LLTC and all that. So the company's purview where I can just understand whether how these things are working, right? So that is also there. Right? So this is the leave travel allowance. Right? So with this, we have almost seen all the major compliances, right? So basic, HRA, medical, travel, Provident Fund, ESI, bonus, gratuity, and LTA. So 9 things we have seen, right? So 9 components is what we have seen till now, right? So next, before getting into the pay slip, let me teach you one more, which is called professional tax. So let me tell you that also, so that you get a wholesome picture, so that you can start working on the pay slip. So we will try some 2-3 pay slips in the class so that you will get a picture. So completely, I will just show you a customized payroll Excel file. Of course, you have a lot of ways and means of doing it. You have a lot of formulas, you have a lot of automations, you have a lot of softwares which is doing it right now. But right now, for your understanding, I'm going to do it in a very small, very structured way. I'm going to do it. But of course, there's a lot of formulas and applications which I'll be telling you in the coming sessions. But today I'm just going to explain you how we can put this in the payslip, right? So that's the agenda. So the 10th point is professional tax, PT. We call it as professional tax. Now, what is professional tax? If we talk about professional tax, is the tax levied by the state government for any profession or salaried employees, right? So that is the idea, right? So for professional tax is a tax levied by the state government. So any professional tax is only collected by the state government. It is not a central one. So which directly means that every state has their own professional tax calculations. So there is no one common percentages like what we have seen so far. There is no common percentages like that. You have different calculations for different states, right? So that is what the idea is, right? So right now what I'm going to show you is I'm going to show you the professional tax table for Tamil Nadu. Right? So for Tamil Nadu, I have a table here. So here in Tamil Nadu, we follow unique style actually. Right? So in Tamil Nadu, we follow unique style, which is we have four, probably three columns which you can have. So I have given you the old and the new tax. Now, right now, the tax has been changed, right? So here you have salary slabs, different salary slabs here, and you have the tax rates here, right? So now let me tell you how we can calculate this basically. So first, let me put this across here. So I have the 6 months income. Right, so I'll explain you what the 6 months income basically is and the tax rate. So which is 21,000, no tax. Then you have 21,001 to 30,000 rupees. Tax rate would be 100 rupees. And then you have 30,001 to 45,000. It is 235 rupees. I'm going with the new tax rate, so don't confuse with the old one. So then you have 40,001 to 60,000 rupees. Then you have this 510. Then you have 60,001 to 75,000. It is actually 760 rupees. Then you have 75,001. It's an above, which is 1,095. Right? So this is how the calculation. So totally there are tables like this, the 6 table like this, and you have a tax rate. Right? So you have a tax rate. Now let us do how the calculation works. Right? For example, so what you have to do in Tamil Nadu and Kerala has a very similar type of calculation actually. So what you have to do is, first thing is you need to find the 6-month income. You need to find the 6-month income. For example, how to find that? For example, I need to calculate gross salary is 10,000 rupees, which is per month. So in order to calculate the 6 months gross, what I need to do? So which is 10,000 into 6, right? So which is 60,000 rupees, right? So this is 1 month 10,000 rupees. If I need to find the 6 months gross, 60,000 rupees. So once I've done, so once you got this amount, you have to check which table it falls under. So this is the table which falls under, correct? So this is the table which has 60,000 rupees, and this is the 510. Now 510 is also again a 6 months tax. 6 months tax is 510 rupees. But to get the per month tax, what I have to do, which is equal to 510 divided by 6, 85 rupees. This will be the per month. So 6 months PT is 510 rupees and per month PT is 85 rupees. This is how we calculate professional tax based on this method. The first thing is you need to find the 6 months gross salary. After you find the 6 months gross salary, you need to find which slab it falls under. Then you just have to go to the tax rate and find out the tax rate, and that tax rate divided by 6, you will get the per month PT. In Tamil Nadu, we pay PT in 2 cycles. So in 2 cycles we pay it. So one cycle, if you talk about, so one cycle is once in 6 months. The first cycle is on September and the second cycle is on March. So 2 half-yearly filing. So every 6 months only the tax is paid in Tamil Nadu, right? So monthly wise we deduct it, but per month only we will actually put it across, right? So September and March will be the date where you have to pay the professional tax, which is 510 rupees, and another March 510 rupees. So totally in a year, how much you will be paying is almost close to 1020 rupees. So 1020 is the maximum professional tax payable per annum. Per annum. That is what it is. So these are the steps. The first thing is take a per month salary, multiply it into 6 months income, then find the slab. Once you find the slab, go find the tax rate and divide the tax rate by 6 to get the per month PT, and that multiplied by 12, you get the per annum PT. Right? So that is what that is. That is how it works. Right? Okay. So are we clear till this? Any questions? Any queries? Are we clear till this? So can we just start trying the payslip?
Yes, sir, you can proceed, sir.
Okay. So let me first try for different salaries. So what I would suggest all of you is, maybe I will start working on one salary slab. I will do that. And I want all of you to also, maybe you can, for all of you, I guess, having a paper and pen, you can also do manually also, 1 or 2 salary slips, you can do that, so that you can have a questions or query you can have, and I can clear you then and there, right? So we will work on like that so that you get more understanding on this, right? So we will do that. So I'm doing it in Excel, but maybe you can do it in manually, because always first when you're trying the payslip, it'll be good if you're trying it manually, because that goes into your head very smoothly. So that is also. Okay, so first thing what you need to do is, the first step towards the payslip is, usually you will have only particulars. Actually, usually you have only particulars, but I am just putting it as receivable deductibles to have a clear understanding, right? So that is the reason I'm doing this. Of course, I will share you different formats of payslip. That's not an issue, but I'm just doing it for your calculation purpose. Okay. So this is the first step. The first step towards payslip is, you need to divide it into 2 columns. One column is receivable, another column is deductible. One column is receivable, another column is deductible. So this is actually the CTC type payslip. So CTC type payslip. Right, so this format which we want to deal across. So what we want to do is, we want to calculate for 10,000 rupees gross salary per month and 1,20,000 rupees per annum. Right, so that is the calculation that we want to do. Okay, so this is what is the amount that we want to do. Okay. Okay, so let us go one by one. Let us go one by one. So first step is, we need to divide the column into 2 halves, receivables and deductibles per month per annum, and then you have to calculate per month and per annum, right? So that's the idea. The first component that you have is, so let me just quickly put the numbers here so that you will have a lot of clarity here. So basic is 30 to 50% of gross salary. Okay. And then you have HRA, which is 50% of basic for metro, right? And 40% of basic for non-metro. Okay. So that's what I'm doing right now, is I'm putting it in the order of payslip. Okay. So then you have medical and travel. So here I'm just putting it as 25,000 per annum. I'm just having a common terminology, so 25,000 per annum. Okay. After that, you have PF. You can just put a capital E in the bracket to understand employer share, right? So which is 12% of basic. As I told you, the real percentage will be 13%. If you want, you can do that also. No wrong in that. So the small e denotes the employee share, 12% of basic. Then you have ESI, you have employer, which is 3.75%. It's 3.25% of gross salary. And then you have ESI employee, which is again 0.75%. Right? So this is also there. And then you have, after PF and ESI, you have bonus, which is 8.33% of basic, right? And then you have gratuity, which is last round basic per month into number of years into 15/26. This is the formula of that. Then you have is LTA, which is again 8.33% of basic. Okay, so then you have professional tax and income tax. Okay, so this is the order. So if you did totally, it will be 9 components, right? So 11 components which will come in, right? So because here you have 2 shares. Okay, so totally there will be 11 compliances, right? So that is the idea. Now these are the percentages. Now let us do how we can calculate this. Okay, so the first thing is we need to put as basic. Okay, so I'm putting basic as 30% here. I'll tell you why. Right? So 30% of gross salary. Okay, so that is the amount which I have. So initially when you're trying it manually, you can write it in the bracket also. No, nothing wrong in that. So here, which is equal to 10,000 rupees into 30%. Okay, so that's what it is. And this is equal to 1,20,000. Or maybe you can multiply this also. Or you can multiply this into 12 also. Any which ways is fine. So both are same. Right? So that is 6,000. Then you have HRA, which is 50% I'm taking because I'm doing it for Chennai. So 50% of basic. So which is basically equal to this into 50%. Okay. This again will be, so this will be again this, so which is multiplication of this. Then I have medical, which is 25,000 rupees, which is the per annum, and this is also 25,000, which is per annum. Just travel, right? So then I have this equal to this divided by 12, because to get the per month I have to divide by 12. So this will be the amount. This will be the amount. Right? So if you want, you can round it off. You get not much of scores. If you want, you can round it off also. So to avoid too much of decimals, and don't round it off too much also, because this is not max, this is finance. So when you're rounding off, it might have the paisa differentiation. So that also be aware of it. Okay, so this is the first step. This is the first step towards payslip, that once after bifurcating this, only 4 items or 4 components will be part of receivables: basic, HRA, medical, and travel. So basic I have put as 30%, HRA as 50%, medical and travel is a fixed percentage, a fixed amount which I have worked on. And next thing is deductibles. Next thing is deductibles. So PF, employee share, okay, which is 12% of basic, equal to basic into 12%. Okay, so it will be 760. This into, okay, this is what the idea is. Then you have PF employer, right? So PF employer, which is the same amount, which is the same amount. Okay, so make sure that you are actually having a correct selection, or else you will go wrong in this. Okay, so then you have ESI employee, So which is again, what is the share, which is this 0.75% of gross salary, right? So 10,000 rupees into 0.75. So 75 rupees, this into 12. Okay, so then you have ESI employer. Okay, so then you have ESI employer, which is again equal to 10,000 rupees into 3.25%. Okay, so this again will be the same. Okay, so this is what. Okay, so this is what. So we have done this. Basic HRA has been done. So PF has been done. ESA has been done. So next what we have is bonus, right? So next what we have is bonus, right? So what is the bonus percentage? It is 8.33% of basic, right? 8.33% of basic, which is equal to this amount into 8.33. Okay, so it is 249. If you want, you can round it off also. If you want, you can do that as well. So 250 is equal to this. Okay, so this is what you can still round it off this as. So if you can do that, or you can put as 3,000 also, no worries. Then you have LTA. So LTA is also same percentage, correct? So it is again the same 8.33%. So which is again 250 and 3,000. So bonus and LTA is same. Now when it comes to gratuity, there is a ceiling, right? It is actually a formula. So which is actually last drawn basic per month into number of years into 15 by 26. Now here last drawn basic, as per this calculation, it is 3,000 rupees because basic per month is 3,000 only. So that is the calculation where you're going to take it only for 3,000 rupees. Okay. But number of years keeps changing, right? For example, we really don't know how many years this guy has worked. Maybe he might be like 5-year-old or 10-year-old. But whatever, how many years he has worked, every year this number of years keep changing. So, but here we are taking consideration that it is only one. It is only one. So how can we do that basically is first let us put a very simple max where it is just 0.57, right? So what you can do is equal to 3,000 into right? So this will be the gratuity money which is calculated on per annum, right? So it is actually per annum calculation. Right, so please ensure that you're using it as a per annum because it is not per month, it is per annum. Right, so you can even cross verify also 3,000 into 15 divided by 26. Okay, which is 1,730 if you want. Logically, if you talk about 1,730. Right, so this will be the per annum amount. This has to be divided by 12 to get the per month score. Okay, so this is something that you need to be very careful about. Okay, so that is also there. So here also, if you want, you can reduce this. Okay, so we have done this. So almost till here we have done. Okay, so this is the step. The first step you have talked about is you brought all the receivables in one side, and then you write all the deductibles in one side where you had all the PF employee, employer share, ESI employee, employer share, bonus, LTA, gratuity. Everything has been added. The next step, what you have to do is you need to calculate the variable component. You need to calculate the variable component. How to calculate the variable component? There is a formula for it. What is the formula? Is gross salary is equal to fixed plus variable. Right? What will be the formula? Is it is actually gross salary minus fixed. So what is fixed is, it is all statutory compliance except taxes. So that is what it means. Which means whatever is being listed here, I need to add everything and minus it from gross salary. Simple. I need to add everything and minus it from gross salary. Okay. Now let us do a rough total here. So what is the total of this if you talk about? So you need to total this and total this also, right? So you need to total both, right? And you have to minus it from gross salary, right? That is the idea behind it. So can you see here? There's a differentiation in the amount, right? There's a differentiation in the amount. There's an alteration in the amount, right? So here, if you talk about the second step, what we have talked about is variables equal to gross salary minus fixed, right? Which is all statutory compliances except taxes. So that is how it works basically. So as per the methodology here, we have actually added everything right from basic HRA, medical, travel, PF employee, employer share, ESI employee, employer, bonus, LTA, gratuity. We have added everything. And what is the total that we are getting is it is 10,430 rupees. But our gross salary itself is 10,000 only. Our fixed component is getting more than that, right? Our fixed component is getting more than that. So that is another reason why there's another trick that you have to do here in payslip. So that is why right now you would have understood how people are manipulating the variable pay. Right? So the variable pay, how people are manipulating. Logically speaking, the variable pay should come like this only, but most of the companies are not doing that. So what they do right now is instead to avoid this, to get a nominal variable pay, what they do is they avoid this amount. So this amount. These three things are removed. These three things are removed from your total here. If you remove this three total, what happens is you will have a small reduction. Right? You will have a small reduction. For example, let us calculate this. This plus this. This is almost 829. So now if I do this, so can you see it has reduced right? Right? This is another logic, hidden logic why we are doing this. So that is the another justification that I am giving you is why the basic is kept as 30%. Because if I give more basic, what happens is naturally my fixed component is getting increased. It is getting increased. So which means I don't have a room for variable pay at all, right? But to create a room for variable pay, I need to I need to do certain alterations in my current salary structures, right? Certain alterations, which I need to avoid that, but I'm going to give that only, but I'm going to avoid it. I'm going to avoid it. Now, after doing all this, if I remove the employer shares, which is PF employer share, ES employer share, and gratuity, if I remove it, I'm getting a leverage, which is 9,602. Now this I have to minus it from gross salary. So 10,000 rupees minus this amount. So what you're getting is 398 rupees. That will be your variable pay. Is 390 rupees. So this is equal to again this amount. Right? So this is what the idea is. So next you do is net salary. Right? Before deductions. So net salary before reduction. So what is net salary before reduction is actually it is actually the total of all this component. So equal to sum open bracket. This is your net salary before deductions. Right? So before deductions. this is the amount, right? So the logic behind here is, so what I have done in this logical step is, as per the formula, it is variable is equal to gross salary minus fixed. Fixed is all statutory compliances. But the idea behind is I am getting more fixed. My fixed is crossing my gross salary. So I need to adjust it. To adjust it, what I'm doing is I'm removing three components from my total. Right? So three components from my total, which is the PF employer share, Esi employer share, and gratuity, which is being removed, which is additionally given, which is from the employer's pocket. It is from the employer's pocket. That is what the idea is. That is what the idea is. That is the reason behind that you're seeing. Okay, so this is the idea. Okay, so are we clear? So next, last step is professional tax. Last step is professional tax. I think already we have seen this amount. So the per month will be 85 rupees because it 85 rupees per month, but per annum it is 510, which is 1020. So here, so you just need to less 80. So where you have to minus 85 rupees. So what you get after this is net salary after, which is actually equal to this. So this is your take home salary for 10,000 rupees. Okay, so this is how we calculate take home. Of course, the last component which is remaining is income tax. Of course, income tax for this salary slab is not applicable. So we are not including that. But this is how a simple salary structure called CTZ salary structure. This is the steps. So the first step is you divide it into two columns, receivables and deductibles. And then first four, basic HRA, medical and travel will come under receivables. Based on the percentage, do the calculation. And the next thing is write all the deductibles, PF employee, PF employer, ESI employee, ESI employer, bonus, LTA, gratuity, everything, do all the calculation. Next step is you need to find the variable pay. How can I find the variable pay? It is gross salary is equal to fixed plus variable. To get the variable component, I need to find out gross salary minus fixed, which is all statutory compliances except taxes. So if I deduct gross salary from the fixed component, I get a variable pay of this 300 city compensation allowance, other allowances, special allowances, all that, night shift allowances, all that. So all this actually is a decoration which is given from this 398 rupees, because they will not directly show that as variable pay. Instead of that, the 398 rupees is bifurcated into multiple deductions, right? That is how it works. And then once you've done this, you have to, next step is you have to do net salary before deductions, which is actually the total of all the receivable components. All the receivable components, which is basic, HRA, medical, travel, and variable, right? So five components. And once you calculate this, then you go to professional tax, PT, professional tax, where you calculate based on the slab. The first thing is you need to calculate the 6 months income, then go to the slab, find out the tax rate, divided by 6, you get the per month tax. After you get the per month tax, you have to less from net salary before deductions. Once you less professional tax from net salary before deductions, what you get after that is net salary after deductions, which is logically your take home salary. For somebody who has 10,000 rupees gross salary, his take home will be 8,979 rupees as per our calculation, right? So this is a very simple pay slip. Of course, there is a lot of complexity. There's a lot of other pay sheets also which is there, but a very simple understanding that you need to get in. This is how the pay slips are being worked upon. This is how the rough calculation is, right? So which is I have shown you all these calculations, right? Yeah. Okay, good. So now I guess we are open to questions right now, because maybe you can just clarify it. And one you can try one more salary slab, right? So one salary slab, I think all of you can try in the session itself so that you get an absolute clarity and then you can go ahead for the remaining explanations, right? Yeah, so we're open for questions. If you have any queries, please start posting the questions.
Sir, there are some questions in YouTube, sir.
Okay, yes.
Sir, from Swarupa Joshna,
Okay.
as you said, bonus is a compensation component. Then is there any compulsion to give bonus for employees?
Yes, it is a compulsory one. It is a compulsory because why I said why, because anything is a part of compensation makes itself compulsory, makes itself mandatory. So as per the statutory norms, you have to give bonus. That's what I told you. In case of loss, also you should give bonus. That is there. Yes, it is a compulsive parameter.
Okay, sir. Sir, again from Swarupa Joshna.
Okay.
Is gratuity is given for every 5 years for employee?
For the first 5 years, after that it is being cut. Actually, the amount gets cut. But if you take that money, for example, after 5 years, if you take that money, then it's nullified. Right? It is nullified because already you have withdrawn all that money. If you're not taking that money, it keeps accumulating. As I told you, after 5 years, at any point of time, you can withdraw this amount. But the maximum amount will be 20 lakhs. That is how the system works. But it's not a mechanism that once the 5 years is completed, it can be any point of time. It is not that you have to wait for another 5 years to take it. No, that is not needed actually.
Okay, sir. That's it, sir.
Okay, good. Okay, I think some of them have raised hands here. Nivas, Hari Prasad.
Good evening, sir.
Yeah, good evening, sir. Tell me, sir.
So if I withdraw my gratuity in after 5 years,
Okay.
that another 5 years after that I will be withdrawn the 20 lakhs.
Okay, I didn't get your question.
Total, so if I'm working in the organization in continuous 5 years. Do you hear me, sir? Sir? Do you hear me?
Okay.
I will withdraw my gratuity in after 5 years. Then I continue my services.
Yes.
Then
Yes.
again,
Go ahead.
Then again I claim for my gratuity.
Okay, I think your voice.
If I
Okay.
I get money from the gratuity. It's 20 lakhs.
Yeah.
It is possible.
Again, if you have to claim, you have to work for another 5 years.
Yes, sir.
Yeah, which is like, no, it's not like that. The idea behind that is because 5 years you have done, you have already withdrawn that amount. Imagine we take a scenario for another 5 years. Next 5 years, you have to continue. For the eligibility for a person is maximum 20 lakhs. That because 20 lakhs for all the employees cannot be accumulated if you talk about 5. For example, if you take this person for the concern, his gratuity money is only 7,730 rupees, right? So which is 1,730 rupees. So even if you accumulate for next 5 years also, it will not cross more than 20 or 30,000. To reach that ultimate 20 lakhs of amount, you need to have a higher salary slab. So which means once 5 years you have done, you got an amount, and then after 5 years you're working again you're working in the same company. What the company will suggest you is, if you are working, please continue working, no problem. And if you are withdrawing, then you have to wait for another 5 years for that to get accumulated. Maximum for a particular employee per account kind of calculation, it is 20 lakhs only, which is divided across between years actually. That is how it works.
Hello. Sir, good evening, sir.
Yes.
Sir, two questions, sir. One is regarding professional tax. We have you have marked it under receivables also, deductibles also. Why, sir?
Okay. Actually, I just wanted to show you. I have mentioned it here, but it is not necessary you have to put it here.
Okay.
But for your clarification, I have put it here because technically speaking, PT will come only in the right hand side. Deductibles are not
Deductibles.
here.
Okay.
Yeah,
Okay.
100%. Because you're just
Okay.
minusing from your amount.
Fine, fine, fine. Sir,
Yes.
one more question is
Ah,
regarding the variable pay. So,
yes.
if we are having a variable component, then we can make that adjustment, sir. Like gross salary is equal to fixed plus variable.
Correct. Correct.
In case
Correct.
if I don't pay any variable pay, so
Hmm.
and
Okay.
all the receivables and deductibles that if we total
Hmm.
it up when it is coming for 10,430, then how
Hmm.
will we manage that, sir?
For example, imagine the variable pay cannot be avoided actually. So one thing I'll clarify you because you cannot
Okay.
remove the variable pay from the pay structure. Why? I'll
No,
say why.
but it is not
Because
statutory, no,
why
sir.
we cannot
Where,
because it's not statutory. That is the biggest advantage for an employer. Because
okay,
the idea behind, no, for example, even the employer puts in him. That is a fact,
okay,
right? For example,
yeah,
imagine the employee is arguing, sir, I don't need all the statutory compliances and all, sir. Sir, I don't PF, I don't need PF, I'll write a letter and give you. I don't need any concern. My only concern is I need to get a higher pay. Imagine.
yes,
This is the scenario that an employer is asking me. What I can do, I cannot change the other percentages, correct? For example, I
yes,
cannot increase my basic to more than 50%. So the
mm,
only thing I can have the room is variable pay only. I think the previous yesterday also we had one person asking a question, right? So my variable
yeah,
pay is very high. Why the
mm,
company is doing this? The company is
okay,
doing this because they increase the variability to show you are getting more take home salary.
okay,
But naturally, what happens is you're losing all the statutory components. Will avoid paying statutory part also, but not the variable part. Variable definitely they'll have this because any payslip that you have, you will definitely have 4 or 5 allowances, which you will not be coming to a raw conclusion why this allowances are being given also, and you cannot come to a logical conclusion how much amount is actually going in. That is also there. That is
okay,
completely will be there. But you can manipulate the variable pay. You can increase also, decrease also.
okay,
So
sir,
that is the reason I suggested you a method here also, to get the variable pay actually.
okay. So the variable pay will be a constant for the end for 1 year, or it will change year to year or month to month. How is it, sir?
It's based on the appraisal, ma'am, actually. For example, if your salary is being appraised, for example, your
Okay,
CTC is being appraised, automatically every component will be impacted, variable also will be impacted, 100%.
okay, okay,
But if
sir.
your salary is not increased overall, then it remains the
Same.
same. Yeah, yeah.
Okay.
So only if you're
Thank you,
just
sir.
a slight change in the gross salary will change everything.
Okay, sir. Thank you so much, sir.
Thank you. So Nivas, yes. Yeah, go ahead.
Hello, sir. Hello,
Yeah.
sir.
Yes, yes, go ahead.
Sir, my question is in gratuity calculation formula, sir.
Okay.
The normal payroll companies using this formula last round basic into 15 divided by 26 into number of years. But
Ah.
most of payroll companies not follow this formula. 10-year
Hmm.
service below than 20, 22 divided by 26 and 20 years and above. Into the last round basic into
Ah.
number of years. Is it in present government act or government amendment to 10 to 20 years above?
So which means you're saying that the formula which I am showed here, are
Huh.
you asking that they are following this? You're asking
Yes, sir.
this one. Okay.
Huh.
Actually, this one you're saying. Yeah.
Hmm.
Okay. This one they're not following actually. The larger formula they're following is this only this, not this.
Okay, okay.
No one is following this because the government itself has made it very clear that it's only 15 by 26.
Okay.
No,
Government
it's
act
not.
is a 15 divided by 26.
Yes, yes, yes. That is a common thing for everybody, invariably of your number of years of experience. To keep a tap, actually, because the idea behind why they came up with the first formula is to give a
Huh.
tap in the gratuity money, so that the money is not exceeding too much. If you put that
Okay.
formula, if you go for other formulas and all, what happens is the money keeps increasing. So obviously, the person might reach their ultimate, the last ceiling amount. To avoid that, I'm using this formula calculation. So all the companies should follow this only. Any companies who are following gratuity money should follow only the first form.
Thank you, sir. Thank you.
Okay.
Thank you.
Okay. So any other questions? Any other questions? Okay, so maybe what I would like to like all of you to do it. Maybe all of you can try this also, and then and there, if you want, you can get clarity also. Because tomorrow we're going to see another tax structure. You will not get that get confused. I want all of you to try the same slip for 20,000 rupees. Okay, so 20,000 rupees gross salary per month. Okay, and 2,40,000 rupees per annum. Just give a try, and if there's any queries, please ask me. You can raise your hand and you can just give a shot. Just take some 10 or 15 minutes time, not more than that. It's not going to take much of your time, but just all of you can start implementing this. And if you have meanwhile any questions, please ask me. I'm always available, because I want all of you to just get this in your head. Because once you get this in your head, any calculations you can do, any salaries you can do. So no worries. You can create your own ways of pay structures. So only thing that you need to understand is the process flow, how this process is being built upon, how the breakup is really working. You need to understand that only. So once you get that understanding, then I think you can crack any salary slabs. That's what that is, right? And if there's all of you can try this. Any questions, you can raise your hand. We'll give you the rights and you can start. Okay. So just take some 15 minutes of time and then we'll meet again.
Hello.
Yes, sir.
Sir, long leave travel concession. What is the criteria for exemption and what is the criteria for paid? What is amount to paid for manager?
The for availing long leave travel concession is actually you have to be in the manager class actually, as per the grade level, because the company will have different grade levels, right? So you have to be in the manager class grade level. So that's the first ultimate criteria. So once you're coming into that criteria, you can use LLTC based on the company's policy, but it is exclusively designed only for the manager class. So when I say manager, somebody like manager, senior manager, general managers and above. So all these people will come under that criteria actually. So if you're belonging to that grade level, you can definitely go for LLTC, or else you might have only the LTC applicable, concession rates, which is given for different travel options.
Yeah, okay, sir. Thank you.
Thank you. I hope all of you are working on it. So let's do one by one. So first, what I wanted from all of you is, once anybody has finished, I want all of you to tell the variable pay first. What is the variable amount that you have got? And then you can say the take home. So this is the first thing I need from all of you. And once you're done with the variable pay, then what you can do is you can tell me what is the net salary before deductions. Yes, and then you can just tell me what is the net salary after it. So that everybody is in the same pace. Okay, because everybody should get the same amount only. And you can keep basic as 30% if you want, or if you want, you can try 40% also, whichever it is. No worries, no worries. But just tell us very clearly what is the percentage of basic also you have taken, so that we'll get a clarity on that. So let's see who completes it first. Is there any other questions in YouTube? Any chats is coming in?
Not yet, sir.
Not yet. Okay.
So there is one more question, sir.
Okay. Yes. Go ahead.
Can you just give brief knowledge about hikes, please, sir?
Hikes. Okay.
Hikes.
Okay. That
Like
is
how?
actually okay. How we calculate on that? Okay. That is actually a little a kind of a different domain altogether. If you have, because hike, when I talk about hike, I need to talk about performance appraisal and performance management. Right? So the PMS system comes in picture. So compensation is secondary actually. So when it comes to high calculation, I only go with PMS, my KRA process. Right? So appraisal process decides on the slabs. I think it's a different domain. Let's see. Hopefully, we have another session where I'll tell you. But once the hike percentage is calculated, so when it comes to compensation, the implementation is same only, because compensation is just going to calculate on whatever salary you're giving. Even if you're giving 20% hike in your present salary, so the gross salary will become 12,000 rupees and you're going to do the pay slip for that. So the compensation structure will not have any impact in the hike percentage actually. However, we are arriving at that 10 and 12% has a logic, which I think only the performance appraisal will give me that answer, not compensation, because compensation has no part on that. So I think Savita ma'am has raised, I guess.
Dr. Savita ma'am, you can unmute.
Hello.
Yeah, ma'am, you can ask your query.
Good evening, sir. So, gratuity fund, which we receive from the employer after retirement or say after voluntary retirement, what is the time limit for the employer to pay back the gratuity fund? Hello.
Okay, I think. Yes. Yeah. Go ahead. Can you repeat the question once more?
Yeah, sure, sir. Sir, once either voluntary retirement or after retirement, what's the time lag of the employer to pay back the gratuity funds to the employee?
Okay, so which means okay, so actually gratuity money is probably processed immediately actually, because that doesn't have any impact with your retirement or something, because that's a different scheme altogether. As I told you, for example, imagine you've completed 5 years in the company, so 5 continuous years, you're done. And imagine the scenarios you have not taken the money, which means 5 years you keep on accumulating, which means after that you have worked in the company, imagine say like 10 or 15 years, which means that 10 or 15 years accumulation has already happened. And imagine after 15th year you're coming out, which means you're taking a VRS and you're coming out of it. So immediately what happens is, once you're done, and that particular year itself, annually we send a letter to LIC that this particular employee has completed his tenure and he needs a gratuity money, because already this person has completed 5 continuous years long back. So totally 15 years of money is coming in. Say every year LIC processes the gratuity for people at a shot. Over has completed 5 years. At that slot, they will send a consolidated check, and that check is bifurcated with every employee and done it. So that is a completely different process actually. So which doesn't anywhere impact with your retirement or something, because gratuity is done by LIC. So LIC will only take care whether the money has come in your account or not. They have clarity over it. They immediately dispatch you. Actually.
Sir, if they're not having any connection with LIC, or if the employer has not made a team with the LIC, then
they cannot hold this gratuity money with them actually. They have to pay to LIC 100%. Just like you have PF and other things, right? So you have to pay to your EPF organization at any point of time. So just like that also, the gratuity cannot be handled privately by the company. They have to 100% go with LIC.
Sir, like
No
you
other
said, they don't cut the gratuity fund from the salary itself, or the employer is not giving in the salary component.
Okay. Ah.
You know, in
Then
many of
I
the
think,
private institutes, educational
correct.
especially, it is happening.
Yes, 100%. Then if there is no deduction happening, then there's no deduction logically happening in gratuity money, then you are not going to get gratuity at any point of time. No, actually. So that is what, because
Sir,
they're
but
not following it, actually.
sir, but by law it is compulsory, sir, because the employer has to give it.
Correct,
So
correct.
according to law, we can go to the court of law if our
That-
gratuity is not being paid.
100%.
Because on the part
Not
of the
only for
employer, it is
correct,
compulsory.
correct. Yes.
Then they have to
Because
make some
imagine,
adjustments.
correct. Yes, 100%. Because
Yeah.
if you're putting like 5 years of service in the company,
Yeah.
now what is the idea behind gratuity is actually to encourage a person to work more in a company, correct? That is the logic, ultimately, right? Which means why that 5 years ceiling itself we have kept is to have the retainability factor. So it is not that you are just rewarding him for the retainability factor, but many people are not understanding it actually. Many people think that gratuity is a very huge money. It is like after 5 years, you get a lump sum like 20 lakhs of rupees for everyone. It's not like that actually. So it is a very smaller amount actually. And it's not a very complex process like PF and other things. It's a very simple process, of course. But I think gratuity is being told by many companies. They say that you have gratuity. But what happens is ultimately either they not make you work for 5 continuous years. They'll do something where you're not completing 5 years in proper note. So that the gratuity money is with them. That is also there. That is also a scenario which many companies are doing also. But if they are really completing it also, whether I'm getting it or not is a practical difficulty I'm facing. Yes, of course. I accept this fact. But because government is not having a proper tap in gratuity actually. So it's not like PF. And the employee also does not fight much actually on this. Very rarely employees fight on this.
No, because employees have gone to the court of law. This is
That
a
is the reason
readdressal.
you had, that is the reason you had the revision of 4 years and 240 days sale actually. Not 5 years and continuous years. Only a person went to the court of law, he came up with the scheme. Or else these people are also being cheated. Just evading 60 days, they are evaded 5 years of hard work money. That is also there. But universally, if you talk about applicability, yes, unorganized sectors still are lacking behind in statutory part. It's a fact. It's not like organized like factory or manufacturing. You cannot escape. You have to give.
Yeah.
Even
even in education institute, you can go to the court of law. One can go for readdressal.
Yes. But that is the problem with them is like how they are organized is what is the problem. The issue which we are having is which act they come under, right? They come under Shops and Establishment Act. Shops and Establishment has certain leverages actually. So how they're using that leverage is a big problem.
Sir, trust.
Trust.
Education
Trust has a different scheme altogether actually. Trust has a lot of exemptions in statutory part. They can escape from a lot of statutory components. Because that is a different industry altogether. Because trust is basically it is a kind of a social welfare kind of scheme, right?
Especially
so which
education
is not going to pay that much money because
so it's a commercial organization,
that
though
is
it's
not
a trust. So people have gone and they have got back.
Correct. Yes. It's about you have to fight with them actually because they're covered under the trust. Then obviously, these people will not respond to you back 100% because they are under trust purview, right? So it's I think the government will not interfere much actually. It's a big fight actually on this. But we need to work on it. There should be a reform on that as well, right? So,
okay. Thank you.
Thank you. Yes. Yes. Martina, ma'am, you have.
Sir, actually, Sir, that bonus calculation, it is 8.33% of the basic pay, right, sir?
Correct. Yes.
So whatever we calculate is for the year or it is for the month, sir?
It is how are you calculating? For example, you're taking the monthly component and you're calculating 8.33 monthly component.
Okay.
If you're taking the yearly component, yearly component.
Okay, sir. Thank you, sir.
Vice versa.
Okay, sir.
Okay, thank you. So anybody has completed? Anybody has got the variable pay? You can just maybe you can share. You can raise your hand and share. Maybe if you're stuck somewhere also, please ask me the question so that we'll get an absolute clarity over it. I guess some of you it's a very been a long work of doing a homework, I guess. So all of you are coming from different education platforms. So anybody has completed?
Dear participants, if you have done with the workout, you can use the hand raise icon so that I can unmute you. Yes, sir, you can ask your question.
Sir, can you brief superannuation fund?
Yes, sir. Superannuation is a little different concept, sir, actually altogether. So maybe I'll try to probably put it tomorrow. Maybe if that is something which is there, little different one altogether. I'll try to cover up, sir, tomorrow. Maybe I'll just give it a try.
Thank you, sir.
Okay. Sir.
Alex sir, shall we proceed,
Yes.
sir?
Yeah. Okay. So I think most of you have work. Maybe we can just do that. So I'll just brief you one more salary slab so that clarity is being given to you. And so that maybe once I'll just give an introduction to that, and then you can just give a try of it. And slowly we will also work on it. Tomorrow we'll see about income tax calculations and other working files. We'll see that as well. So just give me a minute.
Sir.
Yes.
Sir, I have calculated, I think the receivables, sir. It is coming
Okay.
for 13,166 for receivables, and
Okay.
this deductions is coming for 6,701. So when we add these together, it is coming around 19,867, sir.
Okay.
I have not find out the variable pay.
Okay. Okay. So you just have to
One.
minus this amount from 20,000 actually.
Okay.
This total you have to minus it from 20,000. The
That
whatever
will be
remaining
my
is,
variable pay.
that will be your variable pay. Yes. So you have put basic as 30% or 40%?
30%, sir.
30%. Okay. Okay.
Okay, sir.
Okay.
Thank you, sir.
Yeah, thank you. So this is something that you can try. Yes, I think one person has tried it, and you can alter it also. As I told you, if you want, you can remove this compliances also and alter it. Right. For example, let us try for a higher salary slab. For example, I'll just give you another intro of 50,000 rupees per month, which is probably 6 lakhs per annum. 6 lakhs per annum. Now, when you talk about 50,000 rupees per month and 6 lakhs per annum, so imagine I'm putting this as 50,000 rupees. So, and this is 6 lakhs per annum. That is the calculation we talk about. Okay. So how can I work on this if you talk about this? So the first thing is I am putting it as 50,000 rupees. So here I am making it as 40% because I don't have problem in this. Right now I can even increase it also. No worries. Right? So I can do that also. So 50,000 rupees into 40%. Basic, right? So then what happens is the HRA will become obviously this. Now here, can you see here, we have PF and ESI, which is auto-updated here. As we have already automated the formula, it is auto-updated automatically, right? But when you talk about PF, it's showing me 2,400. PF is showing me 2,400, right? So whether it's right or wrong? So whether 2,400 is right or wrong? Another question. What do you think? Right? It's not about right or wrong question, but here if you talk about once my basic crosses 15,000, then there should be a PF cutoff limit of 15,000 rupees. So logically, if I talk about here, it should not be 2,400, it should be 1,800. Which is assumed basic. So this is one reminder that you need to get. Because once your basic has crossed more than 15,000, then to 12%. First alert that you need to work on. The second alert is ESI. ESI is also calculated here, 75 rupees and 325. Whether ESI will come here? No again, right? So no. Because ESI is only applicable for people earning up to 21,000 rupees per month. So once your gross salary crosses 21,000 rupees, then ESI is not applicable. So here ESI will be nil. You don't have ESI payment actually, right? So that is another thing that you need to have. So ESI is also not available for you. So this is the two ceiling that you need to get. PF is, there is a cutoff limit which is being applied, 15,000 into 12%, 1,800, 1,800 and 21,600 and 21,600 per annum. So this will be the maximum PF amount that the person can receive based on the assumed cutoff limit. And ESI is nullified here because you don't have the payment because it is the gross salary has crossed more than 21,000 rupees, right? Other components remain the same. Bonus, LTA, graduate, remains the same because that does not have any ceiling limit. It remains the same. And another impact that you might get is also professional tax. PT also will be different because right now what is the amount gross salary is 50,000 rupees per month. So if you put 6 months, it is 3 lakh rupees. So when I say 3 lakh, it will become the last slab, 1095. So 1095 divided by 6, you need to get, which is 182.5. Right? So that is the amount that you get. And based on that, you need to work on it. Right? That's what that is. Okay, so this is the idea behind this. Okay, so this is one change that you need to note. So whenever you're going for higher salary slab, what happens is your statutory component also will get an impact actually on this. Right, so that is the idea behind this. Right? So this is one understanding I'm getting it. So probably when you're coming for tomorrow's session, what I would always prefer is maybe you can work on this 20,000 and 50,000 also, or maybe one more salary slab also you can work in. Because why I'm telling you to work on the salary slab is once you get the salary slab perspective only, you'll be able to understand this percentages in even more better way. Why this percentage is coming and why this calculation is working. Probably you can also work your own pay structure, your own salary also. You can reverse work according to this pay structure and find out what will be your real take home if I implement as per the statutory norms. If I do that, what will be my pay structure actually. Of course, we have not seen income tax today. So tomorrow we want to see income tax. But if you have income tax also, income tax is again a deduction only, right? It's again a deduction only. So it is again the deduction based on your different income salary slabs. So that is also there as a part of it. So every time when you're calculating pay structures, please ensure that you are following as per the salary norms, right? Because whenever you're following as per the statutory norms, no worries. It's not wrong always. But yes, of course, some companies do not follow this, some companies follow, right? That is a different scenario altogether. But still, this is how it has to be done. This is not created by me, right? Of course, I have not created this pay structure. It is designed by the government and designed by the labor laws. Right? So we are not here to argue or change this pay structure. It's good. It's good. Its own term. So we don't need to change it across, right? Okay. So this is one update I would like to give it to you so that you can start working on. Yeah. Okay. Good. So I think, is everybody clear with this? Any queries? Are we clear till this? Any questions?
Sir, one more doubt.
Yes.
See, we have calculated the variable pay, and
Okay.
after that we will calculate the net salary after
Before it.
deduction, and then only we will add the tax, sir.
Which is like,
Professional tax.
so once the variable you have calculated, the next thing you calculate is net salary before deductions, which is
Okay.
actually the addition of all the receivable components.
Okay, sir.
Basic HRA, medical, travel, variable.
Okay.
So once you get net salary before deductions, you need to less professional tax from that. That's it. So once you less professional tax
Okay.
from that, whatever amount that you're going to get is your take home. Simple.
Okay, sir. Okay, sir. Thank you, sir.
Okay. So I think almost everybody is clear, and I guess there is no questions in YouTube as well. So I'm done from my end, ma'am. So there's anything we need to add?
Okay, sir. Shall we close the session, sir?
Yes. Is there any other questions in YouTube? Anybody has
No.
chatted?
No, sir. There is no question, sir.
Okay, fine. Okay. No worries. So maybe all of you can work on this, because I think my part is almost over, but it's up to you. I think this one day, if you break your head, tomorrow you will have a lot of questions. So tomorrow will be a final day where tomorrow the major idea behind this, we will have income tax calculation where I will show you that, and also a session recap on whatever we have seen so far. And if there is any other queries also, maybe we are open tomorrow also to have a kind of interaction. So that is what I feel. Because of course there are a lot of arenas in the payroll, a lot of different departments, a lot of ways are there. But in these 3 days, I want all of you to just jam pack in what is more possible and what is something that you can understand. Right? That's what I feel. To not overload you with a lot of information. I want you to be very clear in at least in one system of or one aspect of payroll. Right? So that is the idea. So thank you all for that. Yes.
Yeah, sir, one more question, sir.
Yes,
Sir,
ma'am. Yes.
now I have just calculated as per whatever you have told. Is there
Okay.
any means by which I can cross verify whether whatever I have calculated is correct or wrong?
The only problem, so here I think the thing is you cannot cross verify. The only cross verification that you can do is you can just check with the percentages. For example, if you're doing it in manually, then it's a little tough to find out. But if you're doing it in Excel, you can cross verify each and every percentage because payroll system is a finance system. It is not mathematical. So there is no way that you can find whether right or wrong. Only thing you can find out is, as I told you, the ceiling limits. If you have gone wrong in the ceiling limit or calculations, you can find out. Or else sometime you might get a negative salary. Then you're totally wrong somewhere. Right?
Okay.
That is the only reason you can find out. But logically, there is no step to find out. Any amount will come if you put as per the problem. Yeah.
Okay, sir. Okay, sir. Okay, sir. Thank you, sir.
Thank you.
Shall we close the session, sir?
Yes, ma'am. Yes.
So I thank all the participants for your kind support and cooperation in making a smooth running of this session. Thank you so much. I thank the resource person, Mr. Alex, sir, and also Ms. Pooja Shavan for supporting us. Thank you so much. Have a good day and stay safe.
So, thank you all. We'll see you tomorrow.
Sir, one more question from Pavani, sir, here.
Yes, go ahead. Yes, you can ask.
Yeah, Pavani, you can unmute and you can ask.
Mom, I think by mistake she raised her hand.
Okay. Okay, fine, sir.
Okay. Yeah. Okay.
Okay, sir. Thank you so much. Thank you, all the participants.